Hey guys, and welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. Ow, that is an ugly heat map of the S&P 500. Red, red, red. The one outlier may be Tesla. That's not red and just a little bit down at 0.37% on the day. And this is only for Friday, April 22nd. When we zoom out and take a look at the 1 week performance, not so bad, but again, names like Google down 6% on the week, below 2,400. Amazon down 5%, Netflix down 36%, Disney 10%, Nvidia and AMD 8.2% and 5.29% respectively. Damn, that's a hard drop in 1 week. Energy down on the week, Apple, Microsoft, Visa, MasterCard, banks are sideways. We know they reported earlier this week and the week prior. Even healthcare, diagnostics, industrials, railroad, aerospace. Just a really rough week for the market. So again, Friday down 2.74%, and over the past 5 days, actually less at 2.45%, really seeing that peak on Thursday morning. Because since then, the S&P 500 down over 5%. In less than 2 trading days. And this is coming while the backdrop of the past 1 month is down 4% and past 6 months, 7%. We've all been living through it, the volatility, the ups and downs, the macroeconomics, the Federal Reserve, inflation, the war. Oh, what a 2022 it has been so far. Netflix absolutely cratering after their earnings on Tuesday afternoon, falling 25% after hours, and it didn't get any better afterward. And even when their earnings weren't that bad, their EPS actually beat and the revenue just barely missed. Their global paid net subscribers, a loss of 200,000 compared to a 2.73 million as expected. That's a huge miss and why the stock is absolutely plummeting. Bill Ackman, a hedge fund manager, sold his entire stake of Netflix after the earnings. And this comes just after he started his position a few months ago, after the Q4 of 2021 earnings came out. And the stock at that point went down 20%, and then now we're down an additional 30+% in the past few days. Whereas the opposite of Netflix, the anti-Netflix, Tesla reported amazing earnings, beating both on the top line and their bottom line, expanding and recording automotive margins of 32.9%. You see Netflix here falling off a cliff, and even if you go back, year to date from their first earnings call, and you see that big drop in January. Meanwhile, Tesla over the past 5 days, again, very volatile, going up on earnings, but again, giving back those gains with the rest of the market. All right, so before we get into the rest of the video, if this is your first time on the channel, welcome aboard and hit that subscribe button, smash that like button, and take a look at my description for links to my Instagram, my Twitter, and my TikTok. Check it out. Oh man, on the S&P 500 on the daily, that looks ugly. So on Tuesday, we had a pretty green day. It looked like things were reversing. We were getting back to those moving averages, breaking that downtrend ever since the beginning of April, end of March. Things were looking promising that we could go and test back that $460 level on the SPY. And then nope, Jerome Powell spoke on Thursday, and the market had a huge hissy fit, selling off 2 straight days in a row, 2 ugly red candles, and once again using that trend line as a resistance and selling right off. Back to an area of support that we had back in January and in October of last year. Though we're not quite at the lows that we hit back in February 24th, which was the date of the invasion when Russia went into Ukraine. And looking at the Nasdaq, not too different. Tuesday being a good day, but we were still below those moving averages. And really we got rejected again at that 20 EMA, that red line. Finding resistance on Wednesday, Thursday, and Friday, we kept selling off. The one thing though that I do want to take into consideration is the put-call ratio, and what this measures is the amount of puts that are being opened relative to the amount of calls that are being opened, which is one way to gauge the sentiment in the market. The more puts that are being opened, the more fearful we are, and the opposite, the more calls that are being opened, the more greedy we're being. Despite the first few months being really volatile, we never really had the PCC that high. Finally, we're above that 1.2 marker that we've been waiting for on 2 big green candles in a row. Whereas in the past, if we had reached this 1.3 level, it wasn't on a green candle. It was either on a wick or a red candle or a gap up green candle. This is just one indicator. It doesn't mean everything. It's just something to take into consideration. but in my opinion, way better than if we were selling off and we were at like 0.8 or 0.7. At least this is some kind of idea that, you know what, maybe the fear is getting baked into these prices. Maybe not, who knows. The US dollar gradually finding more and more strength. This one has been going up ever since, June of 2021. The dollar is looked at as a risk-off asset and a flight to safety. Next up, looking at the US 2-year government bond yield. We're still pretty much at multi-year highs at about 2.67%. But again, looking at the 10-year Treasury note yield, the curve has been steepening again after we did invert briefly, maybe a few weeks ago, right at 2.9%, and we were expecting some kind of resistance at that 3% area. Crypto not looking too good. It looked like we were recovering up until the market started falling, and usually Bitcoin as of late has been following the stock market, and since Thursday morning, it looked like we were gaining ground on those moving averages, but it looks like we could be falling below the trend line, and that could be an ugly sign for what could be coming. If we continue seeing more weakness below that $40,000 mark, next stop could be about $37,000. Ethereum, as usual, pretty much the same thing. When we see weakness in one, we see weakness in the other. It looked like it was gaining strength on Thursday and is falling out of favor. Both below their key psychological points, Bitcoin below 40,000 and Ethereum below 3,000. Even gold looked pretty good this week, reaching a high of almost $2,000 and again selling off. This one could be maybe a better play if we aren't seeing any kind of risk on whatsoever in the upcoming few weeks. It's sitting right on that 50 EMA, which it has found strength in the past few months. Silver found a high of just over $26, also selling off 3 days in a row, now at almost $24, right on that support line. And oil, a pretty choppy week, reaching a high of $107, $108 per barrel. And right now, in the middle of nowhere, we haven't really decided whether we want to go up or if we want to go down. All right, and taking a look at big tech, the first one being Apple. Again, just like the broader markets, Apple makes sense that this one also looks really ugly. A big red candle, rejection candle on both moving averages on Friday. And honestly, at this point, it just comes down to earnings. Apple reports next Tuesday. It's either going to make or break the stock. There's really not that much technical analysis that you can put into the earnings because you have no idea what they're going to report. AMD has been below $100 for the past week or so and just continues finding more and more weakness. Currently at $88, pricing you could have got in August of 2021. Right before this huge run up that we had afterward, just to come right back down. Amazon, same ugly situation. We're waiting for earnings to come out. The market is really, really fearful of these interest rate hikes. Perhaps the ugliest one of them all, Google. Oh man. This one today breaking its support of 2,500, falling right through, falling over $100 below 2,400. This one reporting this upcoming Tuesday. Microsoft, which has been trading very similar to Google, this one not really as weak on Friday, but still pretty weak in general. And I believe also reporting after hours on Tuesday, similar to Google. Nvidia below $200, barf. Falling below key support that we were expecting at 210, 200, currently at 195. Though we have had consolidation in this area in the summer of 2021, so not all hope is lost. But ugly, 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 ugly. And Tesla, which reported amazing earnings as we discussed earlier. This one not looking nearly as bad as the other names, but still stuck in the middle of nowhere, right around $1,000 a share. We have this long uptrend as well as a downtrend connecting 1, 2, 3 previous peaks. Eventually, one of those is going to give in. But again, I think Tesla really depends on the other names that are going to be reporting next week. Because if the broader market isn't in a good place, it's going to be very hard for Tesla to do well. Because you can tell that Tesla wants to do well, it just can't because the rest of the market is selling off. So you get some good earnings in Apple, Microsoft, and Alphabet, and maybe, just maybe, the sentiment turns around. But until then, we're going to see. Otherwise, that is the end of my video. Thank you very much for watching as always. Let me know in the comments below, what are your thoughts on this ugly market that we're experiencing? Have you lost your mind yet? Let me know in the comments below. As always, like, subscribe, check out the description for my Instagram, my Twitter, and my TikTok, and I will see you guys in my next video.